How's it, guys? Welcome back to FX Rhapsody. Today I wanted to show you two entries on the Euro USD dollar, and also just looking at a bit of analysis for this coming week at the end of the video. Okay, so before we get started, just on the top of the screen there, right hand side, you will see a little link popping up. Just go visit my website. That little video tells you all about my website, what you can expect to see on it, all the previous analysis and so forth, and lots of more content that you can watch, COT reports that you can download, and also a trading plan, and much more. So let's get to the charts. So looking at the hourly for the Euro USD dollar for this week so far. So you see I've got my little horizontal line in there. This was the start of the week. Just wanted to scroll out a little bit more. Now looking at the clean chart, for those of you that know how to draw your trend lines or have been trading for a very long time, you can see this quickly. There's this, let's call it a downwards movement in the market. Just wanted to draw it perfectly here. So this is a downtrend that's on the hourly that we find the Euro USD currently in. So you have your one. I just wanted to make it perfect. There we go. I like being pedantic with my stuff. Let's just pull the bottom one here, and then just a little bit up, and then this one a little bit up. Just wanted to make sure it is perfect. We don't have to have it that long though. Sorry, I sometimes take my time with my trend lines just to make it, like I said, I like making it perfect, so to get the best out of it, or the best view out of it. So let's expand it. So now we can see this downwards movement. All right, you can see the trend line being touched at the bottom, at the top multiple times, not breaking it. Okay, it is not breaking that trend line, meaning it's in a nice downward trend. Basically, price respecting these trend lines, bouncing off it continuously. I'll keep adjusting it. Any case, so there's a spot here that I wanted to, or a zone that I wanted you to look at. This is, for me, this was a key zone that I was keeping an eye on the market. Let's just have a look here. Just wanted to draw it like that. Okay, for me that is quite a, let's call it a significant area, but you can see that price have been bouncing off that area a couple of times, coming back, going into that area, wanting to break it, bouncing out again. Let's just do that. So for me, this is a key area in the market. This area has been respected multiple times as well, being a key area of support resistance, price dancing in and out that area. So what's happening, in what happened was on Monday, you could see that price fell to the downside. Now it came close to this trend line, and then started moving to the upside. Now with this big movement to the downside, I was waiting for a nice retracement, seeing that price is just moving in between these lines. So it broke that key area that I was looking at, then it came up, and I was waiting for that retracement into that key area before placing any sells, or waiting for that sell opportunity to arise. So basically I take my Fibonacci, like you always know, from that low, from that high, which is over here, all the way to this low that's over there. So I'm just going to expand it a little bit, move it to the downside. So you can see price going down, then retracing up, and where, just wanted to take this out, not to confuse the situation. So what I always do is, and for those of you that haven't seen how I trade my Fibonacci, at the end of the video, I'll just put a little link on the top there, and you can just click on that, and you can go watch my Fibonacci version 2 video that I've made, where I explain exactly how I trade with the Fibonacci and why I use these parameters basically. So listen, so basically price went down, then it came up. I was waiting for this retracement right over there, the 62%. Price came up nicely, touched that area, and moved to the downside. So just to put it into perspective, let's take this little tool. So basically, what I do is I put my stop loss above the 100 and my take profit, like we all know, this is my area. First take profit is the 0%, second is the minus 50, and so forth. But I was keeping an eye on this trend line, as you can see. Okay, so you moving that trend line down, your take profit will obviously not be this negative 50% or negative 100% because of the strong trend line. So you're just catching the movement inside the pip. So basically, like you saw here, I think mine was right about there somewhere. But again, it was a 21 pip stop loss, and I made 35 pips. It was close to 40. Let's just have it. Oops, I'm not going to move it. It was close to there. Okay. Because excuse me, because of that trend line being touched. So that is the movement. That was the first sell for this week. Okay, and it is quite easy. I'm saying easy because it is following the rules of this Fibonacci that I've been drawing. I've been looking at, and not just the Fibonacci, guys. I was looking at, like you saw again, I was looking at this area over here for retracement, this key area. I'm looking at this trend lines going down, this price moving down. So there's not just trading with the Fibonacci. Okay, I'm also looking at other factors in the market. So always keep an eye out on the bigger picture. Look at all these. You need more confluences just to make your trade. You can't just rely on one thing. So you're looking at price action. What is price doing? Moving down. So you're looking for a sell. It's moving in between these two areas, the key areas, the two trend lines. It's in a downward movement. You're looking at a key area which was relatively round about there. Okay, so you're looking at all these factors and price coming up into it. It is touching the 62% or going for the 62%. Wait for that movement. It is moving inside this key area, hopefully not breaking it. If it was breaking it, it would have started moving to the upside. But again, it was suspecting this area and it started moving to the downside, going again to touch the trend line. So those are all key factors that you need to look at when you trade. So don't just rely on one thing. Look at the whole big picture. So let's just take this out. Don't just stay in your trades, guys. Just, if you're happy, like I said, like I showed you now, I exit the trade because of that trend line at the bottom. So after you've exited that, it hit the trend line. Let's just show you here. So basically, it hit that trend line. So after this, you're not going to stay in the sell because it didn't break. Do you understand? So now what do you look at? You look for buy opportunity. So this buy opportunity, because of price respecting these areas, it touched this trend line. So because of what happened in the past couple of hours, if you look at the candles, what's going to happen next? You're expecting price to go to the top side. So you're looking for the buy opportunity. Do you understand? Now that buy opportunity came on the 5 minutes because I'm watching not just one time frame. I'm looking at all time frames. I love trading this 5 minute time frame, and I'll show you now why. So basically, the trade was exited over here, okay? As you can see. So exit over here. This was the low. So then price started moving to the upside, okay? So now price came up, and then it started retracing. Because now I'm thinking, okay, cool. I need price to go up to that trend line at the top there. So you have this big movement to the upside, quick movement. So now it needs to retrace. So what happens? You take your Fibonacci from this low to that high. It's not rocket science, guys. Don't overcomplicate trading. Just stick to small little basics and that's it. And again, like I've said to you, what do? You wait for the price to retrace to the 62%. You highlight that area, okay? That's what you do. So now, forget about this. Forget about that. Okay, don't think about that now. So now price coming up, and now it's starting to move down. So you already pull your Fibonacci from here to there, and then you highlight this key area. So now you wait until price hits that area. Don't trade, don't place your trade when price comes to the 50%, say, it's close enough. Then you place your trade. What happens is price is going to go up a little bit, and boom, it's going to go down again. Wait until price goes into this key area between the 62% and the 79%. Your risk is going to be smaller because, let's just say, because what I always do is I place my risk just below, my stop loss just below my 100%. Okay. So now what happened is, or what would have happened if you entered by the 50%? Because you saw this movement, it's like, oh no, price is going to start moving up from here. It is not going to touch the 62%. If that is the case, that's a no trade. Okay. So let's say you opened your trade over there. So now your risk is 11 pips. It's not a lot, but I mean, look at this one. So instead of 11 pips, you open your trade there, and now it becomes 8 pips. It's not a lot, yes, but depending on your lot size, it might be a lot. If price was a bit, if this was a bit bigger range, yes, it would have been a lot. Okay, so rather have a better entry. That's what I always say. So wait for price to touch or go into this area over here, and then you will see price moving up. So if you place your trade right there, again, currently in the trade, it's a buy. So here you can see, just moving it to the side. Okay. So take profit one was hit now, just now. You close some partial profits. Okay. Minimize your trade, and you can see price slowly but surely starting to move up to these key areas. And again, key area number one is right around here. And then number two is right around there, or number three actually. So this is take profit one, which is a key area. There you can see, and there you can see. See, areas where price is moving, is consolidating a little bit, and it's just, something happens in that area of those take profits. So for me, I'm holding my trade. Let's expand it a little bit. Take this out. It's as easy as that, guys. So we know that the moving down, the downtrend was going down, or the trend is going down. It's touched over here. It touched this downwards trend line at the bottom. We're expecting price to now move up because we're looking back a little bit. We're looking to the left. We're seeing price have been respecting those trend lines. So what we expect price now is to go to the upside, to go look or go touch that trend line at the top. So now we're looking at buys. So it comes in the form of a Fibonacci retracement on the 5-minute time frame. Price going up, taking pulling your Fibonacci from the low to the swing high over here. You're waiting for retracement. You're waiting for retracement to happen when it comes to the 62%. Let's just pull this a little bit back. You're waiting price to retrace back to the 62%. You place your trade in the 62%. If you do not want to place it, and say if you want to lower a lower risk trade, you wait for the 70.5%. You will have a little bit less trades. So it all depends on you. It all depends on when you want to place that trade. Do you want to place it when it hits that 62%? Or do you want to place it only when it hits that 70.5% or even the 79%? It is totally up to you. For me, I place my trade on the 62%. I put my stop loss just below the 100, and then you can see price starting moving up. So when price goes past this first target, okay, when price goes past this, let's just draw this little line there, because that is when structure gets broken at the top. Okay, let's take this out, and let's take this out. So now, because my stop loss was round about here, okay, let's just make this another color so you all understand what I'm saying. So let's make it pink. So my stop loss was in about that area. So as soon as price breaks that structure past that first target that I'm taking, then I start moving my stop loss up. So now you can decide, do you want to put it on the 60 where it's your entry is, or just above that entry. So now your profit doesn't matter if trade comes down, if price comes down and if price comes down now, click on that. Thank you. If price comes down and it's hits your stop loss, then you still make a profit on your trade because now you're risk free. As soon as your stop loss goes above your entry, which is around about there, now you're risk free. Don't put your stop loss now over there. Okay, don't do that. A lot of guys make that mistake. Oh, structure is broken. Okay, now what's going to happen is price is now going to come and just bounce off that key area, and then it's going to move up to that side. So my stop loss is going to be safe just below this structure. No, guys, it is not going to be safe. Okay, might be safe right now. Let's see. Price is going down. I'm not going to let the video run all the way until we see what happens. But yes, it might happen. Price might respect that, but this is price action, guys. So I would, just to be safe, just place your stop loss over there. Okay, and then there's less chance of price coming all the way down here and tap it than price just doing and taking out some orders over there that's been placed now and then start moving to the upside. So it might dip into there and then go up. So guys, please, practice this. Go back. Go back into time. Go a couple of weeks back, couple of months back. See what price does when it happens in it. Draw your trend lines. Use your price action methods and use that Fibonacci. Go watch that video. I'm putting the link in the top there. Fibonacci version 2. It is a super tool for me when I trade. Look at your structures, like you've seen now. When price breaks structures, just use that Fibonacci. I made a nice video about the three, the 3 points or the 3 rules of trading currencies. Go watch that. There I explain to you how it works when price breaks a structure, comes to retest on the Fibonacci, and then it shoots. Putting the link in the description now. Oh, not in the, well, it's going to be in the description, but I'm putting it up there to just click in a flag. So go watch that. It is super tool. It is, you will be making money using this. Your risk is going to be a lot lower. And I'm telling you, the pips will come. Always use proper risk. Do not go into a trade with small amount of money, small balance with huge lots. Just risk. Be careful when you risk your money. Okay, be risk wise, if I can say that. So guys, for me, that's all for today. If you enjoyed this video, subscribe to my channel. Hit that notification bell. Give me a like. Hit that like button. There's a lot more content coming your way. And again, go visit my website to watch my previous videos on all these entries and currencies and analysis and so forth. So guys, I hope you are having a wonderful, pipful week. Stay safe and happy trading, guys.